So actually this banker, this is function of bank, this is module B. That is what we are going to cover the coming 5 days. Here, though, most of the thing everybody will be knowing because day to day, daily function of the bank, you will be coming across all these points. But here, when we study from the examination point of view, some questions, the concepts, unless it is clear, will not be able to write the answer. Because when they are asking the question and the multiple choice, everything is objective type only, there will be definitely A, B, C, D answers will be there. Here, the point is almost all the answer will be most close towards it. If you see the answer A, it can be correct. B also, this also can be a answer. C, everything, C, D, everything will be close with the answer. That is why again and again we say the concept should be clear. Earlier and all, only one will be pakka correct, other things will be wrong. Here it is not there. So you have to go for the most correct answer, which is possible only if the concept is clear. And as sir has told that entire IBS backup is with you. We will provide. You need not go for search of any other material. Whatever is here, that need is sufficient for you to score definitely above 70 marks. Okay, with this, I again wishing you all best wishes for coming and taking this online course of IBS. We go with this. First chapter is banker customer relationship. So the legality, the legal connection, everything as a banker, who is a banker, who is a customer. But what is a legal connection? Before that, what actually is meant in the law, a banker, what actually meant a customer in the law, that also we have to understand clearly. So the basic function of a banker, everybody knows that on one side, that supply of money is there, availability of fund is there, people have got money with them. And as a banker, we have to channelize this surplus money available with the people, and we have to ensure that this money is being given by way of loans and advances to the needy people. That is what. So we are actually acting as an intermediary. With the help of us only, wherever the surplus money is there, that we have to channelize. I have to see that that is properly given to that. That is the actual function of a banker. We are actually as an intermediary. So what we have to do, and people who have got surplus money will not just like walk to the bank and give the money. For that, we have to give them high rate of interest. And earlier we used to call it as deposits. Now we call it as a liability. Now everything on the order of the day is asset liability management everywhere, because the profit consciousness is there. A cutthroat competition is there. If you are not highly professional, the existence itself is at stake. That is the order of the day. That is why we should be a professional banker. So who is a professional banker? You should be able to withstand the cutthroat competition that is prevailing in the banking field. So these advances, that advances, that is, we call it an asset. So the banker basically is an intermediary who is just matching that asset and liability. We have to liability, that is the deposits for a rate of interest, they place that bank, and bank got said, we have got, of course, social obligation is there. With that, we have to see the money is given by way of loans and advances. So that is a basic function of a banker. But here that point, that actually what is a banking is defined in Section 3, Banking Regulation Act. In the Banking Regulation Act, it is defined that a banker to be called as a banker should accept the money only from the public, and it should be distributed only to the public by way of scientifically by loans and advances. And basically, though we colloquially call loans and advances, technically loans and advances are different. Loan means term loan, advances means temporary facility. That's for a short period. Example, you'll be knowing cash credit and overdraft. Term loan means usually for a long period. The documentation, everything is different. So that is parlance, we call it as a loan and advances, but technically it is different. Loan means term loan, entire that amount is dispersed for the acquisition of the asset. Subsequently, when payment are made, it comes on the balance, comes reducing, diminishing balance. But here the facility based on how that is utilized, it is being, you will be able to operate for that. Usually that will be for a year. Every year we take stock how that is being fund is effectively used. Depending upon that, we will continue that out. We will just extend the loan for another. So that is a basic of that loans and advance defects. So here the main point that banking regulation abstracts is the banker to call a banker. Another thing is the banker should be either a firm or it should be a company. A individual person cannot be called as a banker. These specifications are there in Banking Regulation Act. So that will clearly explain the concept why a money lender is not a banker. In the case of a money lender, two things: he cannot comply with the stipulations as required under the Banking Regulation Act, because under the Banking Regulation Act, it specifies that he cannot be an individual person. Money lender is an individual person, so he cannot be called as a banker. Number two, the Banking Regulation Act clearly specifies the banker, that is a firm or a company, should accept the money from the public and that should be distributed to the public by way of loans and advances. Here, the money lender, he is only bringing his own money. The purpose is to make profit. And as you know, the banker, though we function for profit, but profit alone is not our motto. Our objective is not. We have got an obligation, responsibility towards the economic growth. Otherwise, with the help of a banker, without the help of a banking institution banker, that economic growth is not possible. So we got a commitment also is there. But as far as a money lender is concerned, profit alone is objective. Whereas in the bank, along with the profit of course is there, but along with that, we have got that national objective. We have got a participation towards that social economic growth we have to contribute. So that money lender cannot be a banker. These are the 2 points. Then coming to the points, we'll be covering only the points which are very relevant for the exam. And once you are very conversant with this point, you understand these concepts, then it will be very easy for you to read and understand the IBS material, which is sufficient for you to get definitely more than 70 marks. Then who is a customer? And actually the customer, though we would have known who is a customer and would have presumed that there will be definition, unfortunately there was no definition for a customer prior to this PML Act. In this Prevention of Money Laundering Act in 2002, there only first time it explained that it defined what is a customer. And almost all the words we have got definition, or it will be definitely controlled, or it is explained by various acts such as Banking Regulation Act, RBA Act, Negotiable Instrument Act, Contract Act, Sale of Goods Act. So many acts are there. But this customer, though, is very common word. It was not defined unless that when after the PML Act 2002 came into existence. Here that customer, is specified, specifically says he should have an account, this SP account, current account, fixed deposit. Now, as you know, we call it, these are all deposit, but in the present day banking, we call these as deposit products. So he should be one of the person he availing, or he should be beneficiary by utilizing, using any of our deposit products. So that means he should open an account. Merely coming to the bank for encashing a check, merely coming to the bank for depositing the money, merely coming to the bank for some other purpose, for some inquiry, that cannot be considered as a customer. He can never become a customer of the bank. Merely coming to the bank for any of the purpose that I have mentioned. He should come to the bank, he should open an account, he should avail of the services that is extended by the bank. Simplest service is he had to open an account. Then the dealing with the banker must be related to the business of banking. He should definitely become, then only the banker customer relationship be established. What are the different types of the relationship, legal relationship established? We have got next slide. We'll go to that after this. Then who can become a customer? Because they can ask in the exam. Actually, or last time or before that, they have asked who can become a customer. A firm can become a customer. A joint stock company can become a customer. A society can become, even a government or a corporation anybody can be a customer of the bank. Only that they should have an account, they should do the business of banking with the bank. These are the only stipulation. There, it never says that only an individual. So to, as I have told, to be a banker, you should be an individual cannot become a banker. But to be a customer, anybody can be a customer of the bank. And the most important is must be a major 18 years of age or above. That's a normal thing, and you should be possessing sound mental health, because this only will establish the contractual capacity of a person, because this is covered under Indian Contract Act, where normally a major will be, this is a normal. But as you know, there are exemptions. That is why we call it as banking law and practice. As per the law, these are the things that guide the banking business, and certain things are there as per the practice. Actually, it will not be there. It will not be backed statutorily or by enactment of any law, but it will be supported by practice, because in the bank, the banking business is guided by so many other factors, and there you cannot find any other service industry like banking where this much of control is there. Suppose any other field, this is the only field. Banking is the one and only field where it is being controlled by various acts. I can tell you, Stamp Act, you should know. RBI Act, you should know. Banking Regulation Act, you should know. UCPDC for guiding LC business, you should know. Sale of Goods Act, you should know. And what all the acts, I'm only just meaning some, all the acts you should, because that is a complexity of this banking. But there are, as you know, exception by practice, though by legally we say that only a major, and 18 years of age also is important, because earlier that naturally a person will come, and when he completes the age of 18, he will become a major. But earlier that court appointed guardian, that was 21 years earlier it was there. Now it is not there. Anybody who completes 18 years of age will become a major, and he is in order in maintaining an account. But exemptions are there. Practically, minors are also allowed with customers. Minors can also open account with the bank. Why this is? Because minors, that two things are there. That is, number one is that we have to inculcate the habit of banking in the inner minds. So as long as the account is in credit balance, only the point is the legality will come into question only when you have to approach a court of law for enforcing something. That suppose you have to proceed against them legally, then only the problem will come. So the law says you ensure that you do not arise such a situation. So that is why some restrictions are there that we have to know. So as long as a minor is there, he can be allowed to open an account. Only that we should be extra cautious. We should be vigilant. We should be vigilant to ensure that we do not create a situation wherein we have to go after them legally for recovery or something. If for some legal recourse is necessary, it will not be possible, because he doesn't have the contractual capacity. So we will not be able to proceed against a minor legally. But as long as that his account is in credit balance, absolutely no problem. You do not have any risk. So the law implies that the bank has to ensure any point of time, if the account is open in the name of a minor, we have to always ensure the account is always in the credit balance. That is why we say these are the restrictions. Then minors can open fixed deposit as per the policy of the bank. Earlier, there was a stipulation that up to 2 lakhs only fixed deposit can be done. Now, as per the bank's policy, the limit can be increased. I think for State Bank, it is 10 lakhs. Earlier, it was only 2 lakhs. Now, only that it can be as per the policy of the bank. So you should know that it's as per the policy of the bank. Now, another question they can ask is, there is a stipulation that normally minors will be allowed to operate the account when, what is any age criteria is there, that will be there. Normally 10 years. If a minor has reached the age of 10, after 10, that is between 10 to 18, he has completed age 10, we can allow him to operate an account, open an account on his sole name alone. So a minor, if he has completed age 10, he can open an account in his own name, sole name, individual name. Why? The reason or the rationale is, it is expected At the age of 10, a minor will be able to put a uniform signature. What is the meaning of a uniform signature? He will be able to repeat with the similar signature, with the help of which we will be able to identify the person. So it is expected that after age 10, the minor will be able to put or give a uniform signature. Hence, once the minor has completed age 10, we can allow opening a account in his own name. And what about a minor below 10? It can be opened along with a guardian. This is the point that we have to bear in mind. So since I have earlier told you that we do not have a legal recourse against a minor in case a necessity occurs, means we cannot at any cost give an overdraft. So we have to ensure, double ensure that the account does not get overdrawn. That is the point. Another thing is, now the question, this is as per you have to inculcate the banking in the younger minds. That is a rationale. But you say new and new banking has come, new products have come. Now the question is whether we can give ATM card or internet banking facility to a minor. RBI clearly says we have to give to the minor. Only that the ATM card has to be given, because on other side RBI says bank has to ensure the account does not get overdrawn. So as long as the account is in credit balance, there is no harm. There is no risk on the part of the banker in giving an ATM card. Number two, internet banking. They say this also can be, because even the younger you are, more habitual, I think they are all very conversant with the technical products. Here also they say that only that we have got two facility. As you know, it is that we have the view facility and also operating facility. But here they say clearly only the view facility for a minor you can give in respect of what internet banking. We cannot give them the operating. So absolutely no harm. Risk is minimal. This is required as per the financial inclusion. So this, the two things RBI has given, that is RBI has instructed the bank to give this facility of internet banking with the view facility and the ATM card as a part of financial inclusion. So that will compose the normal question, possible question that can be asked in minor areas. Okay. And minor, as I have told you, fixed deposit can be opened, and the limit up to which they can open is as per the policy of the bank. Okay. And minor, wherever they can be definitely made as a nominee, can be done in minor only along with a guardian is required. Everywhere the guardianship is important. Then as that KYC requirement of the bank is compulsory, naturally we will insist for the date of birth records satisfiable to the bank, because that unless we know that whether he is attained age 10 or below 10 or above 10, we'll be able to take the precautions as required by the law. Okay. Then we will go to the next slide. As I told you that the contractual relationship is very, very important, because that will determine the course, how we can, the extent of things that we can go legally, how much we can, what are our rights and duties against that person. So the legal relationship will explain it. That is, in the case of a deposit placed by a customer, the bank will be, because here definitely one or two questions they can ask. So in the bank will be the debtor, and who is a debtor? One who owes a debt is known as the debtor. So the customer has placed some money with the bank. The bank owes that money to be paid back to the customer. Hence, the bank is the debtor. And customer has got that credit with the bank. He is the creditor. Very simple. So in respect of the deposit placed by a customer, deposit the bank, the legal relationship between the bank and the customer is the bank is the debtor, because the bank owes the debt to the customer and customer is the creditor. Number two, loan from the bank, just the opposite, because we have paid money by way of loans and advances to the customer. Hence, the customer is the debtor, just the opposite. And bank is the creditor. Bank is due to get the money, credit from the customer, just the opposite. This, once you are thorough, clear with this concept of debtor and creditor, whatever be the case study they ask will be easy to, it will be easy for you to write. Example, I will tell you, no, everything will go as per the examination point of view. In the examination, they will not, what is the connection, that is a legal relationship in respect of an advance or a loan or a deposit, they will not ask. But unless, since you have got this concept with you clear, the question will be, suppose current account, you normally, that one point I forgot to tell you, that current account we will not give for a minor, because the very purpose of current account is for the business purpose. Naturally, a minor will not be doing a business. So current account we will not be giving. And coming back to this, and the question will be like this. What will happen, that what is the legal relationship or relationship between the customer, banker and the customer in respect of a current account overdrawn? So current account is a deposit account. So we should not be guided debtor creditor. Now the account is overdrawn. Overdrawn means the customer has got dues. Customer has to pay. Customer, now the debt is there. So in respect of a current account that is overdrawn, actually the relationship will be this, just like that. So this is a sample question, just I am telling that once you know the relationship, how that is being worked out, what is the legality, then you will be able to just answer any questions, absolutely not a problem. Question sample will be like this. The account will be in a current account that is overdrawn. So merely seeing that current account is a deposit account, we should not write debtor creditor. That's it. That's for that I'm explaining. Okay, then safe custody. You know, you got safe custody. Two things are there: safe custody of articles and safe deposit locker. These two, the legality is legal connection, legal binding is totally different. In respect of safe custody, customer would have given some articles or documents for the safe custody of the banker. We will be keeping it on our fireproof safe, and we'll be giving a safe custody receipt, and we'll be charging a commission, where that relationship is bank will be the bailee, customer is a bailer. So he actually, banker has to get guided by the rights and duties of a bailee as explained in Indian Contract Act. That is, banker has to exercise, put caution as he would do for his own goods. Whatever the precautions that he will be taking for his own good, all those precautions the banker has to take for the articles or documents given by the customer, because the relationship is customer is the bailer, bank is the bailee. And whereas the safe deposit locker, here, you know, all of you will be having locker, you will be all familiar with the how the locker is operating. You know, we are giving only the space, we are far under lease, we are not responsible, we are not aware of whatever is the content, we are only, that is why the relationship is lessee and lessor. Banker is a lessor, he is giving that space on lease for a period of 1 year or 2 years. The customer is who is person who is availing that. So banker is a lessor and customer is a lessee. Two are different. Here, you know, we are aware of the goods, that is it. Here we need not be aware, we are not aware of the goods. That is why the nature of the duty, nature of the facility, how it is given in the product, that determines the legal relationship. And purchase of a draft, these are all very simple. These four things are the common thing that will be asked in the examination. And purchase of a draft, you know, it is the banker is a debtor and customer is a creditor. Because purchase of a draft, because the banker undertakes the debt, the money is to be paid to that person. We call it as pay. And pledge, you know, that is common. Gold loan, this best example. Here, you know, customer is a pledger or the partner, banker is a pledgee. And we got the legal relationship. We have to study more on this, because these are all some rights for a banker is there. Nature of the right depending upon hypothecation, pledge, so many things are there that will go at the time when it comes. So here the relationship is pledger, pledgee. Here the ownership is not there. We are only right that we are keeping against, usually offered as a security against sanctioning of that gold loan. When that gold loan is closed, we have to pay it back. Then mortgage, customer is a mortgager, bank is a mortgagee. And collection of check, you know, this collection of these four things: shares given for sale, standing instruction, sale of purchase. These four things is the banker is only an agent and customer is the principal, because these four things: collection of check, shares given for sale, and standing instruction and sale purchase security on behalf of the customer. The customer, who is a principal, has given some instruction to be complied with. And we are the agent of that customer who is the principal, and we are only the agent. We have to execute the order that is given by the principal. That is why, though, here it is bound by the contract of agency, which is mentioned, which is described in Indian Contract Act. Then pay of a draft, the customer is a beneficiary and bank is a trustee. Because once we have issued a draft, this is a bill of exchange, we undertake the responsibility that it will be paid to the beneficiary. So once he is taking a draft, we undertake that we will be making the payment to that payee or that beneficiary of that customer, for in whose name the draft is taken. That is why we are just act a well-wisher of that trustee we have taken. That is why the relationship is beneficiary trustee. And money deposited but instruction not given, that also beneficiary trustee we cannot take. Where this will come into important is, suppose even if this is a customer who has got a loan account which is NPA, because we cannot take this money. I will explain after this is completed. This is really very interesting. The articles left by mistake. I think this 2-3 times they have asked this in the examination. You see the case study they will be asking like this. Is one of your customer is coming to the bank, and you find that and article some money is being kept by that he forgot to take a cover. A customer visits your branch, and after leaving your peon find that, sir, that customer has come, you find that some money is there, say some 1,000 rupees there, and you find that the customer is an NPA customer. The question they will ask in the examination is, the customer is your NPA customer, you have given a loan and some loan is given to him. Can you adjust this 1,000 rupee inadvertently left by the customer in the branch premises? Though it is a truth that the customer has got a loan with the branch, which is NPA. Here is this, that relationship will come there, that meaning of the relationship will come there. There, the relationship is, it is an article left by mistake. So the relation is, the legal relationship is trustee and beneficiary. It is our responsibility to find the customer and give back the amount. We cannot adjust this money towards our account because the legal relationship is trustee beneficiary. Suppose you advisor contact the customer and he is just thanking you. So thank you very much for giving this money. Then suppose the customer is crediting this money in his account, crediting the money in his account. Then you have got a right to set up. Then you can take that, because here the contractor relationship. Then he will become a debtor and bank will become a creditor. You are in order in debiting his account because customer is a debtor. He owes money to the bank. The account is NPA. But when merely getting that 1,000 rupees, here the relationship is totally different. So you have to find article left by mistake. You have to find the customer and pay. So the nature is very, very important. That is why this explained very well. Depending upon the relationship, bank's rights and duties differ. This is the thing. Depending upon the legal relationship, the rights and duties of the bank that differ. And hypothecation, the customer is hypothecator and bank is the hypothecator. So actually this legal relationship, depending upon the functions that bank is offering, different types of products that we are giving. The legal relationship is also different. Accordingly, the rights and duties of the banker and the customer, the relationship is also very different. That explains the different or that the diversity in the rights and duties of the banker against the customer.
If you like our content, do like, share and subscribe.